So chart 9.1 is the first in the charts for the bumper ebook. Now, what we've tasked you with here is identifying a continuation triangle. We have the answers for you. Now, the cell line of this triangle should have started at the top of candle number 20 and connected the highs of the following candles: 22, 25, 29, and 30. Now, the byline or the support of this pattern was a little bit more tricky to identify. So if you got this wrong, don't worry too much. But we have the correct line drawn with the base of the candle number 20. And this is a horizontal line across, connecting the lows of candles 28 and 30. And you also get a touch on the top of candle number 32. That will complete that continuation pattern. Once you get a close below the support of this pattern, you can obviously then use the measuring technique that we taught you in the bumper ebook in order to work out how low these shares will go based upon this pattern. On chart 9.2, we identified a pattern for you guys on that chart. Now, we asked you what the outcome is likely to be. For those of you that said a break on the upside, you are correct. Because in general, as we know, rising wedges in general are bearish and falling wedges in general are bullish. This is a falling wedge in a downtrend, and we can tell you that after this pattern broke on the upside, the share price over doubled. So on chart 9.3, we set out a little task to find an inverted head and shoulders and also draw a midline on it again. So we want you to have so much practice while we're in this environment where we can give you feedback. Now, if you look at candle number 3, the top of that you should use to start to draw your neckline. You should then connect the highs of the following candles: candle number 6, 20, 34, 38, and 43. Those of you that have watched our eDVD and are familiar with the technique that we use in order to know how high a share price will be sent, the price target that you will get from this pattern is £1.77 per share. And the final task for this chart is to identify the final pattern on this chart, which if you look around candle 50, you will see an area of consolidation after an up move. So that would be classed as a continuation bull flag pattern, which would give you a projection price much higher than it currently is trading. On chart 9.4, your task was to draw a horizontal trend line. Now, this was quite a tricky one. This is a very good chart because this does not jump out at you and say, this is where you should be buying the shares, which is what you will find a lot of the time in up markets. So to draw the trend line across, you should be looking at the top of candle number 112, 113, 114. You'll notice how they are hitting a certain price and failing to break above it. That is an area of interest to us. But this chart really gives the game away on where this trend line should be on the base of the following candles: 145, 154, and 173. Those really are the candles that give the game away and say this is where you should be looking at to draw a horizontal buy line. So if the price come back down and touch that buy line, that would be a buying signal for a trader. On chart 9.5, you will set out two tasks. We have drawn on two patterns, and using what we've already taught you, you need to decide how high the shares will go. We've given you a few options. For the triangle pattern in the center of the chart, The price target from that pattern would be at line C. And for the inverted head and shoulders on the right hand side of the chart, the price target for that pattern would be line 2. So any of you guys that got those two right, congratulations. You have been shown what these patterns mean, and you are also now looking at a pattern and knowing how high or how low it will send the shares. Well done. Chart number 9.6. Now this is a gold mining company share. What we have set out in this task is for you to not concentrate on a specific pattern, but what we need you to do is look at everything in this chart. We've drawn in some bylines which have been broken, etc. And we've also put in some horizontal trend lines. Now, what you guys need to do is use everything that we have taught you so far in order to work out whether you think the shares are likely to go up or down. What gives you the clue is the final pattern that is being formed in this chart. Now, if you look at the last sort of 30 candles in this chart, what they are doing is they appear to be forming a rising wedge. Now, from our tutorials, you will know what a rising wedge will do in general to share prices. They are bearish patterns. So if this does transpire to be a rising wedge, which it looks like it is, you would expect the share price of this company to go lower. And using the knowledge that we've given you of horizontal trend lines, i.e. horizontal buy lines, you would expect the share price of this company to go to at least 35 pence, providing that is a bearish rising wedge.